This is Dr. Duru from Ahan Analytics with the market breadth. I think the last week's trading was pretty simple. Retail and software stocks really ignited. Of course, we had the standard array of AI related stocks that really took off and did well. And yet, market breadth remains in a downtrend. I'm not going to raise any alarm bells on that. The market price action speaks for itself. The major indices broke out above the resistance levels. I was afraid were creating double tops. I talked about this last week. And we even had bad inflation numbers. Inflation is going from sticky to streaky. And I put a link down in the captions or in the description about a very short article that I wrote about the inflation danger that's increasing now for the economy. And we also had war news on a loop, the same loop that we've become accustomed to. We hear about negotiations about to happen or a deal about to close. We hear about the Strait of Hormuz is going to open or it is open, a ceasefire, and yet none of these things really result in anything of significance. It's a really surreal kind of limbo with the war in Iran. But again, the market doesn't seem to care about any of this stuff. It's just looking over the horizon at a better future. But of course, you look at the stock market, you say, well, isn't the present already fantastic? Anyway, let's go ahead and dive into the stock charts that tell the story in living color. All right, let's take a look. Is my favorite technical indicator, the percent of stocks trading above their 50-day moving averages, what I like to call AT54 above the 50. Here is the downtrend that I'm talking about. From the peak of this cycle all the way down, this downtrend has kept a tight lid on market breadth. So technically, I still consider market breadth to be in a bearish position. I'm willing to get more bullish if it could break above this downtrend, which would be let's just call it above 62%. But of course, once that happens, then there's only this small window before this test with the overbought threshold will loom again. And as a reminder, it's bearish. Market breadth gets bearish if it falls from overbought conditions, 70%, and comes down, or even worse, it rallies into that threshold, fades, and then fails to get back there. So that's what's going on with market breadth. Then when I look at the longer term indicator of market breadth, AT200, the percent of stocks trading above their 200-day moving averages, you can see it too is stuck at an important level. This is the line. It's amazing how important this line has been for, I think, 2 years. I think over 1.5 years or so. Actually, let's just take a look. Yeah, it's been a very important line for quite some time. And this is where the S&P 500 was at its previous all-time high in early 2025. So it's interesting to see how AT200 has been pivoting around that. But it is now stuck there, so that is not supporting a bullish case for the market, even though, like I said, the price action is looking good. The VIX is officially flagging bullish trading conditions for the market. You can see pretty much all week long, it was down, and it's in this short-term downtrend here. And it has fallen below the pre-tariff low, which had been a support earlier and had been a pivot point for quite some time. Just as a reminder, actually, let's go to logarithmic style. Just as a reminder, this is what the VIX looks like with this line here. This is where the VIX took off a little over a year ago because of the tariff drama, and noise. Anyway, when the VIX comes low this way, and now it's even below the 15.35 level, which used to be my threshold, it is confirming the bullishness of the market. It's not saying that the market will remain bullish, but it's confirming the bullishness. Basically, the market is not caring about anything. All right, S&P 500, like I said earlier, the major indices all broke through resistance levels that worried me from last week. This line here represents what was a potential double top from last week. You can see the S&P 500 wasted no time in breaking above that and set new all-time highs. Same thing with the NASDAQ. NASDAQ, I didn't draw a line, but it is breaking out to new all-time highs. So it is bullish just from the pricing action. You could see it almost tested the 20-day moving average uptrend line, but it didn't quite do so. So this test, even also for the S&P 500, is waiting as a point for price action to cool off a little bit before resuming higher, before resuming its lift higher. And then like the S&P 500, the IWM, the ETF of small caps, wasted zero time in breaking out above this potential double top that came from last week, the previous week. And just as a reminder, this was a holiday shortened week, so there are only 4 trading days. So IWM looks like it's consolidating for a little bit before it resumes its uptrend. Okay, now let's go right into these stocks. I said software and retail were leading the market. IGV is going to be our guiding light here. This is the iShares Expanded Tech Software software sector ETF. Big day today, up 6.3%, broke out above the 200-day moving average. You can see it's just been steadily, since it hit the last bottom, it's just been steadily grinding higher, with now the 20-day moving average guiding it in this uptrend. Just remember, IGV is still a broken ETF, but at least it has broken out above resistance, which is this 200-day moving average. With a big move, you can see how trading action, let me just make sure you can see this. Notice how the trading volume has soared in IGV relative this year, starting in February. This is when the AI panic that has caused the SaaS apocalypse to erupt really took off, right? Look at the volume over here. Minuscule compared to what's happened here. So this is a major transfer of ownership in software stocks from the weak hands to the stronger hands. That's my contention, and I've been writing all year long about software stocks and how I thought the sell-off has been overdone, and these last few months have been very fruitful in that thesis. Okay, so let's take a look at some of the components. Some of the software stocks, ServiceNow, I've been talking about. It was a key player in a model that I created, analytical model to identify undervalued, beaten up software stocks. Check out my blog at drdewar.com/122. You can search for the acronym PAIROS, PAIROS, if you want to see more. But the basic story here is that ServiceNow soared 14.4% on Friday as a part of confirming this 50-day moving average breakout this week. The previous week, and it's held that as support before launching higher. It is now trading just at about its high point from February. But anyway, bullish move. I have a large position in ServiceNow. Same thing with ticker symbol TEAM, Atlassian Corporation. Large position. I actually have a covered call against this at the 105 spot. I really didn't think that by mid-June this stock could make it there. I've had other successful sells of covered calls. I'm hoping that I don't get called away because I'm really a big fan of this stock, ticker symbol TEAM. And look, it hasn't even gotten to 200-day moving average resistance, which I think in the short term is where this stock is headed. But again, notice the increase in volume since Friday. Again, let me just make sure it's plain. See this increase in volume compared to the previous months, and then it's really soared in the last month or month and a half. That's bullish. Again, I think it's weaker hands transferring stocks over to stronger hands. And again, part of my PAIROS framework predicted that something like this was bound to happen at some point. Cybersecurity stocks have also had a big time this week. I'll call it software. I've written also about cybersecurity stocks, but I won't go into all of them right now. I'll just focus on OKTA, which had a monster move, 30% up post earnings on Friday. This is one that, let me just give you some perspective. OKTA had been going nowhere and drifting lower actually for months, actually since last summer. And I've had a lot of success selling calls against my position. And I did it again ahead of earnings, just expecting, the same old kind of tepid trading. But what I was not careful to note is the slight change in tone, the tenor of this trading. You see what happened after it broke out above the 200-day moving average? It never really looked back. It looked back once, but pretty much this was a bullish breakout here. Stock was able to hold this level. I should not have been so eager to sell a call ahead of earnings, particularly given how long I've held this position. But anyway, that's how it goes. When I get called away, I'm pretty sure I'll get called away. I'll still take a profit, so I'm not going to complain about OKTA. IBM, this is International Business Machines Corporation. Big day today, 12.7% gain. Again, I think this is in sympathy with just the overall run up in software stocks this week as, again, like I said, the tenor of trading is shifting now. This is a dramatic shift, bearish to bullish reversal in the software sector and in sentiment. And just as a reminder, IBM got clobbered back in February. In fact, that was pretty much one of the key bottoms in the sector wide when there was another AI panic. Hopefully you can read this. It was Claude Code up to its old tricks as usual. And suddenly IBM was going to go belly up because Claude, Anthropic specifically, created this automated COBOL migration software system. Anyway, IBM actually recovered very quickly from that, but then it proceeded to go through this downtrend, and it actually closed lower. If you see that right there, it actually closed lower than this collapse. And so it looked like IBM could have been toast, but suddenly it's now riding, first of all, the momentum from participating in a quantum chip factory. That was a nice, healthy 12.4% gain. And then again, like I said, today, 12.7% gain. I expect IBM to eventually get back to all-time highs and resume this nice uptrend. Let me just make sure you can see that nice uptrend. So starting from here, look at that. I think it's time for IBM to resume that uptrend. All right, next on the deck, Oracle, bullish breakout today. Today meaning May 29th. Look at that, up 10.8%. Again, this was sympathy. I think this is sympathy run up thanks to the bearish to bullish reversal in software stocks. So Oracle is a buy on the dips. And then, if you're a short-term trader, you can stop out if it gets below the 200-day moving average. I'm sorry, not you can. That's my plan. Interestingly, Oracle's surge in trading volume started last year, September, when the stock soared over 30%, I think, on AI-related news, and it hasn't been the same since. But it looks like the turnaround is underway for Oracle, ticker symbol ORCL. Big news, DELL Technologies, ticker symbol DELL. I think this is going to be a historic miss for me. And if you're reading the blog, you know what I mean. I have been bullish on DELL for quite some time. I stopped out down here in this period of churn, got fooled, and then I never jumped back in, even though DELL had this bullish breakout post earnings. I kept waiting and waiting for a better time to enter. And you could see here that if I had been a little bit more aggressive, I could have made an excuse to buy here at this point. Actually, let me put little circles here. When I say here, means these small tests, approximate tests at the 20-day moving average there and here. And then even here, these are all great buy points for someone who's like me, who's aggressively bullish on DELL. Just completely missed the entire run up. Just very poor execution on my part. Anyway, let's move on. AAP11, ticker symbol APP, is back in bullish condition. You see the breakout above 200-day moving average. Yes, it is overextended above its upper Bollinger Band. Upper Bollinger Band defines about 95% of the trading range. But it's back into bullish territory, and you can see that's very important because when AAP11 was last in bullish position, it created this double top defined by this purple line. So the stock needs to get above the double top to return to bullish territory. Otherwise, it could be subject to just another extended trading range. So last hit that double top between what was that, September and December of last year. All right, let's go on to retail stocks. XRT. Now, XRT had a great 3 days to start the week. A resumption of soaring from support, even though it was down 1.9% today. And just as a reminder, XRT isn't going anywhere, but in the short term, it is saying a lot. And you could see that the buyers roughly defended the bottom of this trading range. And I'll just draw an approximate one. Let's just call it this line here. You can see how well XRT bounced off of that, but it's still stuck in this overall trading range, and it even dropped today at 1.9%. We'll see some of the reasons why XRT dropped to end the week. But this is a big comeback from retailers because if you remember, I think 2 weeks ago, I was pretty bearish on the sector as it was sinking, and now buyers have saved it. One of the problems to end the week, in fact, a big problem for XRT was Costco Wholesale Corporation, ticker symbol COST. I did some shorts on this. I even bought ahead of earnings because I was confident that my original thesis was going to hold. That thesis came about on this breakout and good December sales numbers and a Deutsch upgrade in the stock, but none of that matters now. This big breakout to all-time highs and then the swift selling actually ended up ruling the day, and now Costco is clinging to the bottom of this box that I drew earlier to define the trading range on Costco. Now, I'm holding Costco for the long term, but it is very disappointing that the stock did not continue its breakout or did not recover its breakout after earnings. So now the stock is going to be stuck, it seems, in a trading range for quite some time. All right, so this is Walmart, ticker symbol WMT. It also had a disappointing post-earnings move, dropped 7.3%. I guess this was foreshadowing the weakness that Costco was going to be suffering or it was at risk of suffering. And sellers have not let up on Walmart. This is a very rare moment for Walmart where sellers are eager to dump shares. The volume actually hasn't picked up that much down here, but you can see the critical test of the 200-day moving average support, which is this blue line. And Walmart has had a very strong run for quite some time. It hasn't even touched this trend line since a year ago during, again, that tariff trauma, drama, and noise. And beyond that, it hadn't touched this 200-day moving average support until way back in January of 2024. I mean, this is just a tremendous run for such a big retailer. So this is a critical test. I'm going to be watching it closely next week. I would definitely buy Walmart on a successful bounce from this support. And I don't think I short Walmart below the 200-day moving average, but I would leave it alone until it's established 200-day moving average support well again. Now, on the good side, this really surprised me. Dollar Tree, ticker symbol DLTR, just came to life suddenly. A big 17.9% post-earnings pop, back above the 200-day moving average, back into bullish conditions. It's well above the upper Bollinger Band, so I'm not interested in buying it here, but if it could pull back to 200-day moving average, hold support, that would make it a buy for me. Dollar Tree, it has come back alive, and notice I put in the center of the screen here, this head and shoulders top, that's the overhead resistance that Dollar Tree faces on a continued rally. Best Buy also surprised me, ticker symbol BBY. It soared 15.8% post earnings, and buyers even rushed in again, 4.3% gain to end the week. If you remember, I looked at this chart, said it was very weak. I was successful in trading some puts in this action, and I'm glad I didn't get overly aggressive on the bearish side. You can see that Best Buy was one of the leaders of the charge in bringing retail back, and it is continuing to lead the charge, and it is in bullish territory. Now, as a reminder, I say it's in bullish territory, but just remember that for many years, in fact, let's go to the monthly chart just to see how much Best Buy has remained static. So you can see here, let's just call this breakout. Let's go ahead and draw this line. They broke out above its all-time high set in April 2006. It finally broke out 11 years later, and ever since that breakout, it has churned in place with a high going up to 135. So that's Best Buy on a monthly basis. So yes, it's in bullish territory, but it also really hasn't gone anywhere for quite some time. So hard to get overly excited beyond short-term trades. Here's another one. I've got my eye on actually to buy next week. This is Red Robin Gourmet Burgers, ticker symbol RRGB. It has often disappointed me, but it's looking bullish again. Now, again, I have to remind everyone, this is a stock that's had a lot of trouble, sold off for years, but it looks like it could finally be basing and bottoming. So I like this breakout. First of all, I like the 18.2% post-earnings gain and the continuation buying into the 200-day moving average breakout. That makes the stock bullish for me. And then finally, Hormel Foods Corporation, ticker symbol HRL. It is not yet in a bearish to bullish reversal, but it did catch my attention because of the 12.6% gain, and the tested 200-day moving average resistance. If it can break out above that, it can start to repair itself from this complete collapse since its all-time highs, I think in spring of 2022. So I have my eye on that. This is not a high beta stock or anything like that, but it's I like the stock yield, which I think is pretty high. I think it's 5 or 6%. So that's one of the reasons why I'd be interested in perhaps putting this in my dividend portfolio. All right, another consumer-facing stock, Delta Airlines, ticker symbol DAL, led the airlines to a huge move today. This past week started last week with a 9.4% gain. I think this is when oil first broke down from its recent highs. And you can see Delta has really been doing well. Let's go to a monthly chart so we can see how well it's done. Yep, Delta, ticker symbol DAL, is broke out to an all-time high. Now, a lot of airlines have not been able to pull this off, so Delta is pretty much one of the best in the pack. But it is telling that even in this time of high oil prices, consumer weakness, and everything else that's going on, that Delta has been able to break out and hold all-time highs. Very impressive. All right, Robinhood, ticker symbol HOOD, is in big recovery mode. This is great. It on Thursday, 11.3% gain. On Friday, 11.2% gain. I totally forgot to bring in label the news here. In my blog post, I'll write about the news that explains this big move. You can see the big volume down here. It's Robinhood is not back to bullish yet because it needs to get above the 200-day moving average, but this is looking good. And I am holding a sizable position that I have been accumulating ever since this consolidation period began back in February. All right, FTI. This is a stock. I don't think I've talked about this before. Technip FMC. And this has been one of my biggest winners this year. I think maybe I bought it last year, and I bought it as a trend play, and the momentum has just kept going and going and going and going. And it finally gave me a reason to sell. I was hoping I could hold it after this latest earnings report. I started getting wary because the stock started limping, and finally it broke down on decent volume. 5.6% below the 50-day moving average is very suspicious to me. I went ahead and took profits, but I am keeping my eye on it because I really loved holding this stock for so long. This is the kind of stock that you really want to find, something that just has this constant momentum upwards, and you could just rest assured that it's just going to keep it going, but it looks like the momentum's coming to an end, so I had to bail. All right, last stock, Reddit, ticker symbol RDDT. Like other stocks, it is not quite bullish yet because it's not above its 200-day moving average, but it's looking good. Strong 3-day move. This was a big fake out here. Meta quietly released this thing called Forum that's like a Reddit copy. I think Meta Platforms is really getting desperate. It caused Reddit to confirm a 50-day moving average breakdown. I kept my eye on it, and sure enough, the stock quickly recovered. On Wednesday, it went up 6.6%. This is the first bullish move, and then it continued, and this is when I pounced. And, this trading volume, and the price action straight up has confirmed a new bullishness in Reddit. I'm holding out for a 200-day moving average breakout. That's what's going to take for it to get back to its bullish ways. But I'm still not going to complain about this gain. All right, thanks for hanging in there this long. This is Dr. Dewar from AHA Analytics with the Market Breadth. If you like this content, please share it. Hit the like button. That way the algorithm knows what's up. Subscribe to the channel if you want to get more content like this. And then down below, put any comments or feedback you have. I'd be happy to answer your questions. Until the next time, please stay safe and have a good weekend. That concludes the trading for May. Again, like I said, do not believe in that sell in May and go away. May was a fantastic month on price action. So once again, that adage seems like it's going to fail yet again. In fact, it's no longer an adage, given how many years it's failed. And as I said, even when, and it's going to happen, even when the market sells off in the summer, those dips are typically buying opportunities at least for swing trades. So just stay alert, you traders out there. That's what I'm going to be doing. All right. Have a good one. Take care. See you next time.